70 to 80% of our trades used to be done through branches or offline. We have almost 90% of our trades happening on our online systems.
Wanted to understand, are outages mainly driven by application issues or lack of scalable infrastructure? Do you face these kind of challenges, and what are your typical challenges that you see in this space?
All those things, when your number of transaction volume increases, corresponding your brokerage increases, so it cannot be a proportionately going high.
Hello, you're watching CIO News on our exclusive fireside chat with financial organizations of India on the topic of digital evolution of India's financial sector. On my today's episode, I have Yogesh Jadhav, the Group Chief Technology Officer at Choice. So Yogesh has worked with Choice for almost 2 years and driving their entire group's technology division. And prior to this, Yogesh was a director at Choice Tech Lab for almost 10 years. Yogesh, it is an absolute pleasure to have you. Thank you so much for taking our time and joining us.
Thank you, Khushbu. Thank you for having me here.
Wonderful. We also have Ashish Karunakaran, the Vice President and Head for Fin Cloud at TATA Communications. Ashish is responsible for expanding the financial services offering across the globe for TATA Communications. And prior to TATA Com, Ashish was the Chief Information Officer for companies like ICICI Prudential, Vidal Healthcare, SBI Capital Markets, and many more. Ashish, once again, thank you for taking our time and journey.
Thank you, Khushbu. Thanks for having me.
Okay, so to begin with, while on our today's topic, we're talking about the digital evolution of India's financial sector. So talking more from the capital markets industry perspective, Yogesh, I wanted to put across my first question to understand what is the future scope in terms of growth, and if you can elaborate on the rising importance of technology in context of discount broking and other disruptive business models, specifically for the capital market industry.
As an India, special position that we are in, the way we have the penetration of mobile as well as the internet. I think so. Right now, for capital market, technology is the core piece when it comes to business. We have seen as Choice broking. We come from a very traditional broking kind of a background, but after COVID, we have seen a drastic change in the user behavior. Before that, we would have around 70 to 80% of our trades used to be done through branches or offline. And right now, after COVID, it is like complete opposite. We have almost 90% of our trades happening on our online systems. So that is the level of drastic, change we have seen in the consumer behavior, and where I think so, if as an service provider, if we are not ready with the required technology, then it was very difficult to provide the services to our clients. So I think so technology has become I think the primary piece when it comes to capital market. We have also seen regulators such as SEBI bringing in regulation to make sure that you have a level of you can say services in terms of technology. You're making sure that your systems are up, you are able to meet the SLAs. And this was not seen before. The compliance was more towards protecting the consumers in terms of fraud and all those things. But right now, even the compliance is talking about, are your systems up to the mark? Are you making sure you're getting, the clients are getting that level of services through your technology? Even they came up with the Llama framework, wherein you have to report periodically report to the authorities in real time about your system performance, right? This was never done by any kind of authorities before. So that is where we can see a shift towards how technology has been, very critical in terms of capital markets. And when we talk about disruptive models like discount, definitely for discount broking, they have always played technology as the core piece. All the asset heavy models like we Choice are a traditional model. We kind of a phygital kind of a model that we work on. So we have our branches, we have our franchisees, But even in that model, definitely for this discount brokers, their primary focus would be technology. But even for us, wherein we have an handholding or an you can say a partner on ground, which a client can connect to, still for us, we have seen a great shift in the requirement of the clients in terms of technology availability. They don't want to be relied on someone to place their orders. They want to instantly place orders, look at their profits, or look at their portfolio in real time. So that is where I think so there's a drastic shift. Future wise, as I said, the need is an ever evolving need in terms of before it was just about do you have the technology. Right now it is more about how good your technology is, right? So if you want to distinguish yourself in the market, it is how good. So like I said, SLAs, it could be the performance that you're getting out of those things. And as a service provider, I have been with Choice for more than 10 years, and we started with this tech division around 8 years back. So we were just a team of around 20-25 people, but right now we are a team of almost 180 people. So you can see that how even organizations, traditional organizations, have been prioritizing technology. They have been looking at how do you drive efficiency using technology. So not just the clients, but also operational things, like we are expanding into tier 2, tier 3, tier 6 cities, and even there we see technology helping us monitor, making sure that the level of service is consistent across all the geographical areas. And that is where also we see technology playing a core role. And as I said, the team that has been expanded in this area has been focusing on not just the client phase, but also the operational things as well as compliance things.
Okay, fantastic. You also spoke about, Yogesh, the importance of the customer's confidence, right? So especially this in the capital market industry. And so taking back to the SLAs that you spoke out, so there are severe impact of outages on businesses, right? Wanting to understand, are outages mainly driven by application issues or lack of scalable infrastructure? Do you face these kind of challenges, and what are your typical challenges that you see in this space?
Like I said, outage or the service level that we provide to our clients is very critical in this age of time. Even like I said, the compliance, SEBI and all those have implemented LAMA framework, wherein they want to monitor the quality of service or the infrastructure that you are providing. If we talk about the numbers, say on an average, in capital markets you have around 1.5 lakh crores of turnover happening in a day, right? So that is around 400 crores of turnover happening in a minute. So imagine the impact that an outage could have, not just on the business, but primarily on the client side in terms of his profit loss. Majorly the clients that we see are into derivative markets. These huge volumes generally happen in derivative markets, and there, these outages have a very huge impact in terms of client. And, even all the authorities have been focusing on protecting these clients against these kind of losses, right? And even for us, it is, business loss, the reputation loss, this could be secondary, but primarily it is all about, client confidence. So that is where outages play a very big role. As in technology, I think so. What we have experienced in last 8-10 years, we have seen that the primary reason always starts from application level. We have seen a pivot point wherein at that point we see bottlenecks in our application, right? Till a particular time, definitely we don't see any kind of problem in the application layer, but after a particular pivot point we see there are bottlenecks. So the primary way we handle these bottlenecks are definitely using infrastructure, right? So for example, if you have a database driven application, if I have issues with the database, performance of the database, what I'll do is I'll scale up the infra to make sure I handle that thing. But ultimately long term is to make sure that we optimize that database, right? So it starts with the application layer. We try to handle that bottlenecks using our infrastructure. So this is where we try to handle our average usage. And then there's a second piece wherein we have a dynamic usage. So in capital markets you could have some events such as RBI policies or anything, sir. You have your budgets and all those things. Some days wherein we cannot predict the you can say the usage that you can. Definitely, we can plan for 100% scaling or 200% scaling, but again, it is just an prediction. We can never know exactly what kind of demand we would be expecting, and that is where I see the primary reason that could be a failure would always be infrastructure, wherein we need a dynamically scalable infrastructure which is available instantaneously. So this is where I see two failure points. Primarily, definitely is always application, and secondly, if there's a dynamic demand, it's always the infrastructure.
Ashish, my question to you is, owing to the increased regulatory focus on CSPs and SEBI's latest mandates regarding the cloud adoption framework, how important is it for CSPs to share the responsibility regulated institutions?
I'll take from what Yogesh has highlighted few things. So because he was mentioning about Choice being a traditional institution where the focus was predominantly the branch-oriented approach, and post-COVID is where he has seen the traction in the India digital ecosystem. If you look at the kind of dependency on the technology for the whole of the business, and I don't think it's not around for the Choice, it's all across the industry. I don't think it is only for the equity broking houses, because during that particular time I was part of the mutual fund industry and including the banking. So the dependency on the technology has increased significantly, because any outages or any kind of maybe even to the level of any deviation in the kind of the service offering or the operational efficiency as such, this will have a huge impact in terms of the financial ecosystem or maybe the customer trust as such. So he was mentioning about, I remember Yogesh mentioning about your 1.5 lakh crore is a daily turnover assets. Hey, look at a situation where actually an exchange is not operating for maybe for an outage of for 3-4 hours, the kind of an impact it is happening, and it is an impact it is happening for overall investment community as well. The regulators are very particular because they are talking about a systemic risk and customer confidence and stuff like that. And at the same time, this is the time actually the organization started adapting to the cloud, because we have been seeing that actually exponential growth in terms of the volume of the transaction happening, and accordingly your infrastructure need to scale, and a natural adoption will be natural take is actually okay, go to say auto scaling environment, right? So it's a cloud is a natural choice. And also for some or other reason where actually it makes sense to kind of go for a cloud adoption, there are people with a different opinion about that. That's a different debate altogether. But that means that actually the regulators are also very particular about that. So the financial institutions are going for technology adoption bit. Technology is becoming the backbone for the India financial institution, and cloud is becoming the critical point in terms of how the technology is getting delivered for the India finance ecosystem, and naturally it required to have it to be appropriately regulated to ensure that this is being appropriately delivered. And so that way we have been seeing that actually series of regulations that is coming either from SEBI or from RBA or even from IRDA. Specific regulations are happening. Okay, even the regulatory point of it mentioned that it need to be the regulated entities. So in this case, actually Choice or anybody who is an entity. But I think it's a CSP or the people like us, it's a CSP, right? So, or maybe anybody who is part of the ecosystem cannot shy away from their own responsibility, because we are part of the entire value chain, and your existence revolve around that. You have your responsibility. So this was also some of the reason where actually we as TATA Communication take that particular approach, and we have seen that particular need in the industry kind of come up with some of the value proposition, like bringing a compliant cloud and stuff like that. So that's the way we have taken it. But at the same time, the whole of the value chain, the point I want with the whole of the value chain cannot shy away from the taking a responsibility of this particular compliances, because it has the compliances are maybe whatever the regulated requirements are for a purpose, and it is essential for the survival of the industry, and all has to take part equally in that particular thing. And it's everybody's responsibility to ensure that the ecosystem is surveyed in a way that actually it has the right kind of growth happening.
Yeah, so I like, add on this, the change that we have seen in our own team, right? So when it comes to compliance, we used to have a separate team, used to take care of all the, compliance pieces. As a tech, it was more of an, you just needed to know what was
True. So your compliances was predominantly earlier only on the business compliances.
Yes.
Now
Now the tech team has to be well aware of what the compliance says. So if you want to, adopt any kind of technology, if you want to design anything, you have to be aware of what the compliance says. So that is what, the change that we have seen in our own team, right? So the team has, like even when we have a conversation, we talk about references of, what are the new directives that have been published, how are that going to impact our, working or the new rollouts of, features and all those things. That is a big change we have seen in the recent years.
True. And I think it is more and more, it is going to be like stringent at the same time. Even if you look at maybe in the, say, 2010 to 2020, the number of circulars were limited. But if you look at the number of circulars from 2020 to, say, for example, 2024,
yes,
it's phenomenally high. Yes. Earlier, it was at a very high level guidelines which will be given, but now it is a very prescriptive control it is given.
Exactly.
And you should do like that. So that is the way it is coming. And it is going to be more and more in the coming future, because you will have the whole of the things is going to be run by technology. Specifically, like if you look at maybe some level of automation or maybe some to the level of some of the AI adoption happening, then it's more and more stringent on this.
Yes. And what we have also learned is, rather than, fighting and, debating on the compliance, it is more about understanding what is the underlying thing that they are trying to protect. So it could be the interest.
Or maybe I got an opportunity to interact with SEBI for multiple things. So somehow I feel that many of the circulars and the intent of that is appropriate.
Yes.
To protect the interest of the customers, and in a way actually it is a responsibility of everybody in the ecosystem to protect the interest of the investor. And fundamentally these investors are paying you, and indirectly we are also getting paid, right? So
ultimately we have a goal, right? Even SEBI is talking about democratizing this capital markets, getting maximum users to participate, and that is what also all our businesses want, right? And definitely if you have a common goal, then we can definitely achieve it.
It's a definitely yes. Completely.
Lovely. Good. I like the way the conversation is flowing. But on that, Yogesh, I have a question. How critical is this worry of bill of shocks of technology budget, and how capital markets participants making responsible cloud choices?
So I think so we'll split that into two pieces. So I'll take the second piece first, wherein SEBI has come up with many circulars that has really guided us when it comes to adopting cloud infrastructure. They are like, even Ashish said, they are very specific about things right now. They are talking about what kind of agreements you should be having with the clouds. Even I think so they have list of empaneled cloud providers which we should prefer. So I would say it has made our life easier when it comes to deciding, choosing vendors, and how do we use this infrastructure. So definitely we are looking at how because all these guidance come from some kind of experience, right? So maybe for us it is better to use that experience so that we are not having any kind of surprises in terms of compliance or anything going forward. So I think so these frameworks has really helped us structure our way how we are handling adoption of new technologies, specifically cloud. Because before that it was more about, like you said, again, cost plays a major impact, right? So if we are adopting something, definitely it boils down to, is it cheaper, right? And if there are the compromises that we make might be something that we don't give a second thought, but definitely that played a major role. But right now we are looking at all those compliances, all those circulars has really helped us structure how we decide how do we adopt technologies. And second, definitely as a business, it is very critical that we look at the unit cost. So for us, definitely the unit cost could be the cost of executing an order, right? And if we are able to bring that down, definitely we can pass that benefit to our consumers. So when you want to reduce that cost, they have n number of factors. So definitely technology, the underlying infrastructure services that we use, play a major role, as well as the backend that we have, the way we have structured our complete ecosystem. And of course, one of the KPIs or KRIs for our organization is always to reduce that unit cost. So as we scale, we don't want to increase our infrastructure cost exponentially. So that is where cost plays a major role, and that is where we have seen one of the advantages of cloud is on-demand infrastructure. Before that, we used to provision based on the next year targets that we are expecting in terms of client and the orders that we will be having on our technology platform. But right now, that provisioning is just 60% of our budgeting. Rest of that is more about dynamic thing that we are expecting. So scaling our infrastructure during the market hours. So start at 8 in the morning, scale that up, and then again reduce that scale on the 4 p.m. right? So that has really helped us control our cost. And in the night, it's like only bare minimum services would be running. And this flexibility has been provided in terms of adopting what we have seen in cloud technology, and that has helped us reduce our bill shock.
Awesome. Ashish, you being a former CIO, so your perspective, what is your view on the need to strike balance regarding the hybrid? So, Ashish, you being a former CIO, it'd be good to have your perspective. What is your view on the need to strike a balance regarding a hybrid cloud architecture, for an efficient technology infrastructure?
I like the way the kind of the approach Yogesh has taken in terms of taking like all of the infrastructure spending point of view. Maybe I'll just add on further into that. For any business to scale or maybe to operate it sustainably, it is essential that their cost structure need to be well contained, and at the same time there need to be in terms of visibility in terms of how I'm going to change, how I'm going to kind of structure my cost structure maybe in the coming years as it. I'm going to have always the technology consumption, it's going to increase year on year. Your customer base is going to increase, your customer usage pattern is going to increase, and your the number of services technology is going to be used also going to increase. But at the same time, I cannot end up in having a situation where most of my technology budgets are being spent only for certain type of maybe capabilities and everything. So there are times where actually maybe a decade back, there are some of the solution stacks and everything. There is a notorious stories about the whole of the profits that being kind of taken over by some of the OEMs and everything. So those kind of horror stories are there. Everybody is in the ecosystem knows about. I don't want to name or any of those things. But being for a sustainable point of view to operate and being provide the services to the customer, and it is essential that you should have a cost predictability in terms of your services and all. Always the approach is going to be like have a predictability in terms of either in terms of your infrastructure or in terms of your software usage, and even at the same time of the scale, or maybe even at the time of actually like if there is a consumption is coming down, so that's actually you need to have it. So hybrid model is where which you have your predictability in terms of your infrastructure spending, infrastructure usage. If you have a predictability, there is always an option to have your capex oriented approach where actually you kind of fix that particular thing. There are certain kind of requirement where you have your scalability required. That's where actually we'll go and look at various OpEx oriented approach. So it's more of like now the service providers are coming with all kind of hybrid models. So I don't think there is a fixed formula for a particular kind of workload or maybe particular kind of industry, but it is all depends upon the kind of an environment and how we are going to foresee your future in terms of which is a kind of market you are going to serve, which is kind of products you are going to serve in the market, and accordingly like it need to be taken. So maybe to the view is that go and take the right kind of partners, who has an option to have all kinds of options available, so that your infrastructure or maybe an application stack point, if it can scale.
Yes, so even when we look at partners, we definitely look at flexibility, like you said, predicting particular usage is definitely is just a point that you can start with, but definitely you need to have that flexibility to handle the growth in terms of it could be the infrastructure requirement, or even new systems that we plug into our ecosystem, right? So sometimes even we have seen that there's an immediate need of a particular system that needs to be plugged into the ecosystem, that requires an immediate provisioning of the infrastructure, and that is where where we see that flexibility. So like as I said, for us it is always that unit economics, right? So everything, definitely the budget that we have boils down to the cost
you actually. So for example, you charge X dollar as a brokerage for your customer.
Yes.
That X brokerage, your technology component is, say for example, 10% of that particular X.
Yes.
Out of that per 10%, your infrastructure component comes actually like 2%.
Yes.
That 2% cannot go 4% under any circumstances.
Yes.
It need to be 2%.
Yes.
And all your effort is actually how can you make that particular 2%, 1.5%,
Yes.
so that it can add into your overall profit margin on that. So, and all those things, when your number of transaction volume increases, corresponding your brokerage increases.
Yes.
So it cannot be a proportionately going high, because then of course the economics of scale need to come. So that's why, that's the reason I said that actually I cannot have a prescriptive approach for every customer. Every business, it is specific.
Yes.
And you need to have unit economics will work over there, and accordingly, like you need to have your right kind of solutioning and right kind of options available, and so then work on that particular thing, both in terms of an infrastructure, maybe find an application licensing perspective, all those things.
We have to be dynamic, and as a team we have understood that
Dynamic and flexible enough.
Yes, so maybe you have designed a solution that is working for you right now, but going ahead, definitely you have to be flexible enough to make the required changes and attain the most optimal solution that is possible.
And that also was because the environment itself is so dynamic. We're seeing every year-on-year changes in the markets and in another.
That's true. I'll add into that setting. So Yogesh was mentioning about that 70% your branch-based business, 30% your digital business. The COVID has made everything change and become the other way around.
Yes.
So if he has not anticipated, he cannot anticipate any change, right? It's that kind of a drastic change. And if your ecosystem is not flexible enough to handle such kind of a situation, you are kind of out of business, because your exit cost for the customer nowadays hardly anything. There are enough equity broking houses in the market, then you can start trading on that particular thing.
And that eKYC has made it really easy to switch into brokers.
True,
right?
true.
The complete ecosystem that even NPCI and all this that government has built. Even I think so for share market, right? We have moved from T+3 to now even the targeting for T0 kind of setup.
T+0.
Yeah, so
Your customer onboarding nowadays, many are saying actually less than 10 minutes you'll finish the customer onboarding, right?
Exactly. So if you're KRA compliant, if you have all your documents on DigiLocker and that ecosystem, it is a breeze to just do your KYC. Before that, it was someone visiting your place, taking your photograph, documents, signing those documents. It was kind of a big thing. But right now, that even for consumers, it has become easiest to switch service providers, right? So for them, it is like if you're able to meet those requirements, okay, else I have someone, and at least like we have seen, many of the consumers have at least 2 to 3 applications installed on their mobile, right? And they used to compare these, like, look at this application, this is providing this, why are you not able to do it? Or even the consumer has become technologically, you can say more sophisticated, and that has really pushed us also as a service provider to look at all those small nuances wherein we can optimize our application.
I always say technology is now spoken in every department of an organization and every house of India. So, and it's exciting times. I take
So
it.
we even in our organization say that now technology is not an separate team or an arm that organization has. It is core team that every department needs to have. So even HR needs to have someone who is well aware about the technology. You need to have your operations team that has to be aware of the technology, because everyone is now dependent on them for efficiency.
Great. So, great conversation with you, Yogesh and Ashish, as usual. Thank you so much for taking out time, joining me on CIO News. And like promised, we'll be soon meeting on our studio. So, thank you so much for joining virtually, and I look forward to meeting you in person. Thank you.
Thank you, Kushbu. Yeah.